Welcome back to Explain the Charts, your ultimate destination for in-depth market analysis and unbiased trading insights. Today, July 18th, 2025, all eyes are on Microsoft, ticker Microsoft, which is making headlines by hovering in record-high territory. Recent news highlights an upcoming earnings report for Microsoft, a major catalyst that Wall Street analysts are clearly anticipating. Bank of America, for instance, has just raised its price target for Microsoft to an impressive $585 from $515, signaling strong bullish sentiment. Jefferies has also named Microsoft a top AI winner, underscoring the company's robust position in the booming artificial intelligence sector. While not directly related to Microsoft, broader market news includes HSBC's warning on CoreWeave, leading to a panic sell-off that could hint at general market cautiousness towards high-valuation tech stocks, especially around earnings season. As of this morning, Google search indicates Microsoft is trading around $508.58, showing a slight decrease from its previous closing high, perhaps indicating some pre-earnings jitters or profit-taking. Now let's dive into the charts, starting with the daily view to understand the long-term trends and key price levels. Looking back to March 2024, Microsoft saw some volatility, dipping from around $414 down to the $398 to $400 range before consolidating. A notable support level emerged in late April and early May of 2024, as the price found strong footing around the $389 mark, quickly bouncing back. This $380 to $390 zone has proven to be a resilient long-term support for Microsoft, evidenced by subsequent tests in August 2024 and early March 2025, where price reversals occurred from these levels. After these pullbacks, especially following the March 2025 low around $380, Microsoft embarked on a strong and sustained uptrend. We can see a significant surge in early April 2025, with a massive 10.45% single-day gain, pushing the price from around $353 to over $390. This was likely a major news-driven event that injected considerable buying interest. Since then, the rally has been consistent, breaking through several resistance points that now act as new support. Previous resistance around $450 in late 2024 and early 2025 has been decisively breached, and, more recently, the $490 to $500 area, which was a consolidation zone in June 2025, has transformed into a key immediate support level. The current price, as of yesterday's close on July 17, 2025, is $511.70, placing Microsoft right at the cusp of new all-time highs. This bullish trajectory perfectly aligns with the recent analyst upgrades we discussed earlier, suggesting fundamental strength supports the technical breakout. To examine the more immediate price action and short-term trends, let's switch to the one-hour chart, focusing on the period from late June to mid-July 2025. Here, we can clearly observe the recent aggressive push that lifted Microsoft towards its current high. Notice the strong upward momentum starting around July 8th to 9th, with consistent green candles indicating dominant buying pressure. The break above the psychological $500 level on July 9th was significant, validating the recent bullish sentiment. Following this breakout, the price consolidated briefly around $500 to $503 before making its final ascent. This hourly view shows the resilience of the upward movement, with very shallow pullbacks, suggesting strong conviction among buyers. The $500 level on this time frame is now a critical immediate support zone. Any dips below it could signal a short-term reversal or deeper consolidation. The volume accompanying these upward moves has been healthy, indicating genuine market participation and not just speculative trading. For an even more granular look at the recent breakout, let's zoom in on the 15-minute chart, specifically from July 17, 2025, between 13:28 Universal Time Coordinated and 15:58 Universal Time Coordinated. During this period, Microsoft stock demonstrated powerful intraday strength, moving rapidly from approximately $506 to over $513. This sharp move highlights the intense short-term buying interest and confirms the record-high territory mentioned in the news. Such rapid vertical moves often indicate strong underlying demand, as traders are willing to pay higher prices to enter. However, they can also lead to short-term overextensions, making them susceptible to swift pullbacks. The current Google reported price of $508.58 on July 18th, compared to yesterday's closing high of $511.70, suggests that some of this intraday strength from July 17th is already being pared back. This small reversal indicates profit-taking ahead of earnings, or perhaps caution due to the broader market warnings we touched upon earlier. Monitoring volume during these minor pullbacks will be crucial. Low volume suggests healthy consolidation, while high volume could indicate a more serious trend reversal. So, should you be bullish or bearish on Microsoft? Long-term, the reasons to be bullish are compelling. Microsoft's continued leadership in AI, cloud computing, and its robust ecosystem suggest strong growth potential. The raised price targets from prominent analysts like BofA to $585 further reinforce this long-term positive outlook. However, in the short term, especially leading into the earnings report, caution is warranted. A pullback could occur if the earnings are merely in line with expectations or if there's any perceived weakness in guidance, leading to profit-taking. A significant bearish turn, however, seems unlikely without a major negative surprise, such as a substantial earnings miss or a broader tech sector downturn. To recap the important price levels, the long-term major support remains strong in the $380 to $390 range, a historical bounce point. Midterm support, established from early 2025, is around $415 to $420. Most immediately, the $490 to $500 zone, which was a previous resistance turned support, will be crucial to watch. On the upside, the immediate resistance is the $512 to $514 high achieved on July 17th, while BofA's target of $585 represents a significant long-term upside potential. My unbiased prediction for the short term is a likely 30% chance of consolidation or a slight pullback around the $500 to $510 range, reinforced by pre-earnings caution and recent rapid gains. There's a good 60% likelihood of continued uptrend in the mid to long term, especially if earnings are strong and the AI narrative strengthens, making the $585 target highly plausible. A significant reversal below $490 is unlikely, perhaps a 10% chance, unless there's an unexpected negative development or a major market shock. Things to look for include the exact details of the upcoming earnings report. Pay close attention to revenue growth, cloud segment performance, and AI-related guidance. Also, observe the price action around the $500 and $512 levels. A decisive break above $514 on high volume would signal strong, continued bullish momentum, while a sustained drop below $500, especially if accompanied by high volume, could indicate a deeper correction. Always remember to combine technical analysis with fundamental news and your personal risk tolerance when making trading decisions.